Okay, welcome back. That's conversations from Davos, which we will keep sort of getting to you. But we want to talk about a big news development which was announced about an hour and a half back or so. I'm talking about Nazara Technologies. Stock is up 2% or so. Now, what's happened is that an existing investor, actually a bunch of existing investors have come together and are buying about 25% of the company, triggering an open offer with the intention of acquiring another 26% in the company. So the set of investors wants to go up to 51%. Remember, the existing investors of Nazara hold about 9% in the company. We have, the existing promoters, Nitish Mitterson, Joint Managing Director and CEO of the company, joining in now to take some questions and explain this entire thing to us. Thanks very much, Nitish, for joining us. You've done so many acquisitions, and we've spoken about many of the, at least some of the bigger ones. It looks like you yourself are getting acquired here. Just explain to us what's happening step by step with numbers. I mean, what do these existing investors own? What are they going up to? And how does things change? Will you still be running the company? Go on.
Hi, Prashant. Sure. I think it's very exciting news for us today and a big milestone in our journey. Arpit Khandelwal and the Plutus family have been investors with us for over 4 or 5 years, and we've had, very good relationships with them. And of course, the well-known tech entrepreneur Mithun Sacheti, founder of Carrot Lane, invested in us in the last preferential round. And also, I think just the fact that we've been able to get such marquee investors to cross over the line, join hands with us in this vision that we have of making Nazara, a global gaming company to reckon with out of India, I think is something we've done for 25 years. And this is another milestone that will get us there. We are very excited about this opportunity, as well as what 2025 has in store for us.
So explain the transaction for our viewers, Nitish, with numbers. What does everybody add? Who's going to what percentage? Sure. Just step by step. Go on.
Sure. So today our board approved a preferential issue of 495 crores at a price of rupees 990 per share that will be issued to Aksana Estates LLP, which is jointly held by Mithun Sacheti and Arpit Khandelwal. This preferential placement collectively increases their stake to 25% because they will add 5.4% more through this preferential issue. And therefore, it triggers a mandatory open offer, which they have already intimated a while back.
Nitish, hi, afternoon. What happens to your stake? Your stake was at 9% as per the last BSE shareholding. What would it come down to? And are you open to bringing it down even lower? Would you participate, for instance, in the open offer? Would you stay as a promoter of the company?
Yes. So we are very much, in control of the company. We are going to remain the promoters of the company and hold the positions of MD, CEO, etc. I think for us as original promoters of the company, we really more than stake in the company. I think we have soul in the company. We have, full commitment to the vision that this company was started 25 years ago of making it a global gaming company to reckon with. And this is the right thing to do, to bring on, really strong hands who come together with us to achieve that dream that we have. We will continue running the company. In terms of the stake, there'll be a 5.4% dilution due to the new preferential issue. So maybe our 9% will come down to 8.6 or so. Besides that, the promoters are not selling any equity at this point of time.
Nitish, hi. So just trying to understand whether there'll be any reclassification of promoters. You're saying you will remain a promoter at just sub 9%. The new entity, Aksana, they will remain institutional investors, or because they're at 25%, then there's an open offer and we need to see how much they go up to. So what will be their classification and what will be their role, more importantly, in the company as the largest shareholders?
So in terms of classification, the PACs, which are the people acting in concert, Arpit Khandelwal, Mithun Sacheti, Aksana Estates, Plutus Wealth, and also Chuna Mita, Finsol, all would classify as co-promoters. or deemed co-promoters. And in terms of operational execution, like I said, existing promoters and existing management will continue to run the company as we do today.
No, but now you're saying they will be classified as deemed co-promoters. So then we now need to understand, their thought process as well. I remember a conversation that we had right at the end of December when you'd done a small acquisition. At that time, you told us that the cash level in the company was, I think, 300 to 400 crores. And now there's this preferential issue that's happening. So what is the cash in the company and what is the immediate strategic vision in terms of the areas of focus? Because at that time, I remember you told us that there's a lot of emphasis on offline gaming. There was emphasis on growing the real money gaming vertical as well, along with, of course, the sports vertical and the other businesses that you have.
Yes, I think the big picture here is that, Nazara has, built a very diversified, profitable, now global gaming platform. And the whole idea is to supercharge this and accelerate our growth. We obviously have seen good success in past M&A. In the recent cash deployments, we've also increased stakes in most of our companies to 100% and have control of many of our subsidiaries. We today announced a small asset acquisition of 2 games, which we are quite excited about. And in 2025, we will definitely focus on boosting significantly our organic growth, but also we have a very strong pipeline of M&A, especially in the core gaming business, which we hope to expand.
Nitish, just a quick point. There is complete alignment here, or the people, because Aksana will own 51% of the company, right? If the open offer is fully taken up.
There's, I would say, 101% alignment. Like I said, the whole dream is to make this India's biggest gaming company globally. And I think all of us are fully aligned to make that happen.
And, but if you have a co-promoter coming on, I'm sure that they add and they bring a lot of experience and, their own sets of skills, etc. But they will also have their own views about what direction to take. So I'm just sort of asking you again, is that...
No, I think there's good alignment on vision. And, they are backing 25 years of experience and credibility that we have built. And I do not anticipate any such issues going forward. I think collective thinking will be able to kind of enhance the vision and the strategy going forward. And we will very aggressively execute it.
Okay. How many board seats for you, the current promoters, and how many board seats for the new co-promoters? And secondly, the open offer is at a price lower than the current market price. What is plan B if the open offer is not successful?
So in terms of board seats, the existing board is constituted of 2 promoter seats and 4 independent directors, 1 non-executive director, so 7, 2 out of 7. And also 1 seat that is held by a Plutus nominee. It's going to remain as it is right now, without any further change, at least in the short term.
Nitish, give us some numbers. I mean, as this gets underway, I'm sure there'll be more discussions going forward as the transaction is complete and the open offer is complete. But some numbers, again, I'm going back to the last stated conversation where you said, at least for this year, FY25, I think you're expecting about 10% top line growth. But now as this business, I mean, I understand the larger vision of being one of the biggest gaming companies of the world. But say FY26, 25, 26, going to 27, right now, what visibility do you have? What sort of top line growth, CAGR, what can we expect in terms of cash levels, both organic, inorganic? I mean, all put together, if your investors stay with you for the next 2 years, what is the kind of EPS accretion, top line growth, margins? What should they, expect?
Yeah, I think FY27, our target of 300 crores EBITDA is very much on track. And we feel extremely confident about achieving that. So I think all our focus is on that. In terms of how we will achieve that, I think a combination of organic as well as inorganic growth. Many of our organic businesses are also in recent months and quarters picking up steam. And I think you will see acceleration of growth in the coming quarters. I'm very confident of that.
Okay, all right. Thank you very much, Nitish. Appreciate you joining us. And thank you for joining us exclusively this afternoon on CNBC-TV18 with all of that detail. Stock was buzzing last few days. Today, did go up about 4.5%. It's come off the day's high, but trading higher at this point in time. Deepan Mehta is with us of Elixir Equities. Deepan, good afternoon. Good to have you with us here. Thank you for your time. Interesting and important day in terms of what happens over the next many hours all the way to the Trump inauguration. But Nazara, I'm sure you heard some of that conversation. Any thoughts?
Yeah, Prashant, good afternoon, and thank you for having me on your show. Well, I have certain thoughts on Nazara, but I don't know whether the viewers will like it because I have been an investor in the company, or rather, I was an investor in the company right from IPO. And then a couple of years ago, I just threw in the towel and I sold off all my holdings which were there. And while you were speaking, I was just checking out. In 2016, Nazara's revenue was 211 crores and operating profit was 76 crores. Come back almost 8 years later in March 24, it is doing 1138 crores in revenue and operating profit is just 99 crores. So what has happened is that it has had a long period of stagnant profits, and whatever appreciation has happened because of P expansion. And it is one company which has clearly underperformed its potential. It operates like a hedge fund, keeps on acquiring companies, divesting companies, diluting its equity. And end of the day, the bottom line remains static. And that's the most disappointing part of Nazara. And all such gains which are there, appreciation which is there, up moves which are there, are best opportunities to sell off Nazara. And this is one company which, although it's in a fabulous sector, and there's no other way to play the gaming sector except through Nazara, but that track record has been extremely disappointing to say the least.
Which is why that question, Dipan, which is why I tried asking the question, saying there has to be some clear roadmap. I mean, in terms of if investors stay on, what do they get? Because it's been a lot of headlines on acquisitions, etc. But like you're saying, long-term wealth creation, I think the clarity has been missing, at least for the past couple of quarters. Let's see, with this new arrangement, what comes through. But let's talk about happier things in terms of today's trading action. And look at what's been happening to the two stars of the day, right? Kotak and Wipro. Let me start with Wipro actually first. What do you think it is? Is it just market positioning? Because if one were to look at it dispassionately, the it's got flat growth, top line growth, and obviously still guiding for -1% to +1%. The margin improvement has been staggering. The cash payouts that they're talking about, obviously that's very, very impressive. Would you, be an optimist on Wipro after the third quarter?
I think I don't understand. Maybe I'm getting a bit old for the market. That the people have lowered the bar, is it? I mean, you have stagnant performance and 1-2% single-digit growth rate, and the street rewards it. I don't understand. In 30 years of the market, I haven't seen such phenomena. I mean, a few years ago, we would have sold Kotak as well as Wipro on such a very poor set of numbers, 8-9% type of growth rate. But here the market is rewarding them. So I don't know, maybe I'm getting something wrong over there. But certainly I'm avoiding all such companies which I don't understand why they should go up and trade at these multiples, despite having such poor and stagnant performance. Okay, all right, in the future things may improve and therefore you can pay a higher multiple. But look at the track record for last few years or so for both these companies, and then suddenly out of the blue you start paying a higher premium, hoping that the management delivers, it's not new in the entire IT industry. You see several quarters they've been saying that, oh, the turnaround is around the corner, discretionary spending will pick up, revenues will pick up, but end of the day, I think it just remains flat. So let's just wait and watch. I'm not buying into these rallies. And in fact, as shareholders of Kotak Bank or Wipro, I think they should seriously consider their long-term positions in these companies. I doubt they have the capacity to grow at double-digit 12-13% on an extended basis, which is necessary to create wealth.
Okay, all right, Dipan, stay on. We'll come back, discuss some more stocks with you. We do have to take a quick break, but as we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app from the Apple Store or from Google Play, or you can even scan the QR code that's on your screen now.
Welcome back. Well, the markets actually are doing pretty well today. All that we saw on Friday in terms of a downtick, that's almost all of that has got, got reversed, which is good news. And a couple of stocks actually are doing quite well. The OMCs, BPCL and HPCL, both of them have moved to the high point of the day. So keep an eye out on both those two names. But let's get in Mitesh. Hi, Mitesh. Good afternoon. Good to see you win. Mitesh, we're above that 23,350, which is a crucial mark. 23,400, I think that will be the next resistance. Your view on the markets at this point of time on the Nifty and the Nifty Bank, and also fill us in with a couple of stock calls.
Good afternoon, Ajay. So I think the Nifty, I think it was now at this level of 23,350, which is what you were indicating would be the level. The high is about 23,390, which is very similar to what we got a high on Thursday last week. So I think let's see a break about 2400 or an early close about two early close about 23,350. I think that could suggest that a pullback could be, this pullback could get stronger to about levels of 23,550, 600 zones. Otherwise, we are still in that range. But the good thing is that we have stopped falling. The hourly to hourly charts, the indicators are turning flat, which means that a new low may not be made immediately, and therefore more possible or a more probable outcome could be the markets breaking about 23,350 and extending this pullback by another 200 points. So that's the way we are approaching it. On the stock side, Tata Consumer is something which has come on the buy list. Would recommend buying here with the stop below levels of 945. Look for 990, 995 as the target area. And the other one is United Breweries, which is a buy with a stop below levels of 2035 for targets of 2120.
Okay, all right, stay on. Mitesh, we'll have some more questions in a bit, but for the time being, let's put the spotlight on the telecom space. And we have our colleague Ashmit joining in. The telecom industry's demand for some sort of AGR relief or partial waiver, that seems to be finding at least, some hearing in Delhi, because Ashmit has been, verifying this from, independent sources, that there could be something of this sort that is being considered. Let's go across to him for the latest. Ashmit.
Well, clearly this has been a long pending demand of the industry. The industry, suffering repeated setbacks at the hands of the Supreme Court, had turned to the doors of the DOT, the government, to grant some relief. Now, since the September 2024 decision by the Supreme Court, which closed the chapter on the Supreme Court proceedings, rejecting the curative application, there were concerns raised by the affected telecom players before the DOT, and that is what the government has chosen to respond to by way of considering the submissions that have been made. Bear in mind, the figures are mammoth as far as the industry is concerned. Vodafone Idea, with the staggered interest payments, that figure, that AGR demand figure, has stacked up to north of 80,000 crore rupees. Bharti Airtel is somewhere in the neighborhood of about 42,000 crore rupees. And these figures is something that they're competing with, that they're struggling with. And towards that end, the government is contemplating, not deciding as of yet, but contemplating waiving off the penalty and the interest component of the AGR demand. The AGR demand had a principal, an interest and a penalty component. The government is considering waiving off the penalty and the interest component, either fully or partially. That is under consideration. But there are a few aspects to bear in mind. Number one, the Supreme Court repeatedly in 2019, 2020, 2021, then subsequently in 2024 has dismissed any and all approaches being made by the telecom companies to dilute this demand, to readdress this demand, to recompute the demand. In fact, the only relief that they've allowed is a moratorium and a staggered payment, and that too with an interest component, so that the net present value is maintained. That is importantly something to bear in mind. That moratorium runs out later this year. Those payments start kicking in September 2026. And finally, the third aspect, that if at all a waiver is granted, this would be relinquishing of public funds by the government to the private sector. That is something that is going to weigh on the minds of the government as they go about the various levels of approvals that may be required for this decision. So no timeline yet, no final decision yet. But yes, the government is considering if at all a relief can be granted to the telecom sector. Back to you.
Okay, all right, Ashmit, thank you for that. So there's some green as the market gets hopeful that maybe some sort of a relief indeed will come through. And Vodafone Idea obviously has been the biggest beneficiary today, rising between 9 to 10%, though of course the caveat is that it is a 10 rupee stock. Mitesh, any interesting trades here on telecom given the news flow?
Well, I have a disclaimer that I personally have Vodafone Idea in my portfolio. I think, the stock was showing good traction last week. So I bought it actually last week itself when it managed to get past a very important supply pivot of 8.5, 8.6 zone. And since then, the trade has worked well, but I think I'm still not seeing a massive upside, over here. I think it's a trading bet. 10.85 to about 11 is the first target area. We got a high of around 10.47 today. And then if that is cleared, a target possibly around in the range of about 12.2 to about 12.3. I think that should be it. But given that, if you've been able to buy it around 8.5 rupees, that's still a 40-50% kind of a move you can capture. So it's a trading bet. As long as the stock is above 9.4, I think maintain a long bias. Look for targets of 10.85 to begin with, and 12.20 is the next target.
Dipan, were the numbers of Paytm exciting enough? Revenues went up 10% quarter on quarter. The EBITDA loss came down. What did you make of the numbers?
I think decent set of numbers, and certainly supports the stock price increase we have seen recently. And if it keeps going on this path, I think a quarter is not far when it will start to show profits, and then incremental growth will go towards going solid into the bottom line. And I think gradually all the regulatory issues are well behind them, and management has I think put its head down and focusing on delivery, on execution, and that's reflecting in the numbers. End of the day, their key strength is the fact that they have millions of users and so many merchants also on their website and their platform, and that certainly benefits them. And lastly, this government initiative, which is so right, to reduce the concentration of UPI payments away from just Phone Pay and Google Pay to homegrown companies. If some regulation comes, then it will be very favorable for Paytm. So that could be a further trigger point. I'm not selling Paytm at these levels. I think at corrections, it may look like an interesting buy.
Okay, all right. Dipan, for many quarters, I think you've maintained that the cement and metal stocks don't excite you. But I want to ask you about the pipe companies. APL Apollo Tubes, they have just come out with that set of numbers, and I'll tell you what is the key number for me with regard to their numbers. The EBITDA per ton in the past quarter, it fell down to around 2,000 rupees. Now that's recovered to around 4,200 rupees, but it's still a distance away from that 5,000-6,000 rupees odd that we've seen in the past. What's your view on the stock? I'm asking you this because it's a play on the economy as well, infrastructure, as those spend, as capex comes back. And this is one stock that's done nothing in the last 1 year.
Nigel, first a disclosure, we are invested in the company, so our views could be biased. Very pleased with these set of numbers. I think even their pre-quarter release was very interesting and optimistic. And I think the focus on value-added products is what differentiates APL from any of the other commodity pipe manufacturers or steel manufacturers for that matter. And it's focusing a lot on brand building. It's got some marquee, names to endorse their products. And this entire phase of, beautification of structures, be it commercial, residential. Then we have modernization of key infrastructures like stations and building of new airports. All of these things benefit APL Apollo, and I think they've got the strategy right over there in terms of how to grow the business. And it's got a very, very large market share, a dominant market share within the space it operates. So many positive things going for APL Apollo. The only thing, of course, is the valuation. It remains pretty much high, but then, one can't have everything, and we remain firmly invested in the stock.
To play this theme, APL Apollo is the only one you would look at, right? Because there have been talk about the other players, try to play them on valuations. But irrespective of the valuation, if you want to play this theme, you rather stick to the market leader that has more than 50%. Is that correct?
Yeah, absolutely. I think amongst the so-called building products category, I think this is one of the good companies to look at in terms of growth. And there are very few sub-segments in this building products category which are just falling off the grid, like, paints and even pipes for that matter. We saw Supreme Industries numbers are not that too exciting. So one by one, I think, we need to assess that within this building products, which is also play on consumption, on infrastructure, which are the stocks or the segments which are really still going strong, and APL Apollo certainly is one of them.
By the way, look at a few more names, right? Look at CG Power, if you can pull the stock the intraday up. It came a long way off. Almost 900 rupees was the high, and 2-3 days back had fallen to about from 9 to 600 rupees. So coming back up, it's recovered about a little over 10% from the lows a few days back. Tejas Network, for example, is another name. High was about 1500. Last week low was about 970, from 970 to about 1100. These are decent recoveries which we are seeing on many of these names. Credit Access, of course, is chopping around still. So the low was about little over 800. Stocks at about 1,000 rupees. That is Credit Access. And of course, UBL is, of course, news related. It saw that sharp sell off very, very quickly from 2,100 to about 1,900. And stocks basically recovered 50% of that damage coming in right now. Many other names, Greaves, Cotton, I can go on with a few others, Sare Gama, etc. Large volumes and sort of well-owned names which are seeing recoveries after recent sell-offs. Deepan, thank you very much for joining us. Pleasure as always. Appreciate your time here on CNBC TV18. Well, we earlier in the day spoke with Pankaj Tibrewal of Ikigai Asset Managers. He thinks maybe, with the third quarter, once the third quarter is out, he's expecting aggregate earnings cuts, but that perhaps would be the time where you should look at buying some sectors. So this is a slice of that conversation with his picks.
Going into 25, some of the concerns which I think are genuine and we need to address them. One, we did a dealer check across the board, across distribution, across sectors. And one thing which is coming out clearly is that the liquidity is extremely tight and working capital cycle has got elongated across the board. The second one is that probably the government capex has slowed down materially. I think the easy money is behind us. Markets should consolidate for next 12 to 18 months and bottom-up ideas will make you money. So we need to be extremely careful on the BFSI side that what is the loan book? Is it more unsecured? Then we need to be a little careful on that. And I think that's something which is a reality.
Okay, I think the Zomato numbers are on our screen. So the top line has grown a smart 64%. Let's see what the bottom line is going to be coming in at. Because I think the expectation was that the GOV will keep growing higher for both food as well as for Blinkit. But the question is what happens to profitability and, of course, the new apps like, for instance, District that they've launched. Zomato stocks reacting quite sharply on the downside. We'll get to the bottom line in just a bit. In fact, let me see if I can open the press release right now and get any further details on it. No, doesn't seem to be having too many details. As of now, I think we only have the revenue numbers, so we'll get to the others in a bit as we go forward. I think we do have Mitesh with us while we get to more of the fundamentals around this and more of the numbers start trickling in. Mitesh, Zomato kind of has gone into a bit of a range now after having a pretty stellar last few months. What are the levels, immediate levels now for this?
To me, I think, Sulbi, this is a first, sign of some kind of a correction. The bigger supports for the stock taken around 220 to about 210 zone. It's rallied from 50, sub 50 levels to about 300 without any kind of a significant correction. So I think now is the time when the charts are suggesting that the stock either will do a price-wise correction or a time-wise correction. I think a time-wise correction already started, failed to sustain about 300 and time and again it's come back to about 240 levels. But in case 240 breaks and there's a chance of that, then I think 220, 210 is the range where the stock could possibly, take a breather and sustain.
By the way, on the profit line, I'm talking about now for the company as a whole, the net profit line. The profit has reduced over the previous quarter. Profits at 59 crores versus 176 crores in the September quarter. And obviously, these companies will be gauged more quarter on quarter just to see if that turnaround story, that improvement in the internal ratios, whether all of that is sustaining or not. So this is just the net profit number. So let's wait for it. We'll get it Mangalam to give us some more of the details. In fact, I think we've got Mangalam. Mangalam, how's it looking?
Well, the numbers aren't looking particularly bad. If you are concerned about why the profit of Zomato is down by about 57%, remember they are on that expansion spree when it comes to quick commerce. And at the same time, they made an acquisition of, Paytm's going out business as well. So as a result of which, the depreciation, which is a non-cash expense, has increased from 128 crore to 247 crore. And that has resulted in, the bottom line being a lot lower than the same number in the previous quarter and the same time last year as well. But year on year, these numbers would be a lot better because quarter on quarter, they have the seasonality impact, which will make it look a lot better anyway. So look at year on year, 64% revenue growth at 5,400 crores. And the company is on an operating leverage, mode. And as a result of which, the EBITDA is up nearly 218%. 51 crores turns into 162 crores. And the bottom line, like I pointed out, impacted by depreciation. If you look at the segments as well, food delivery, out here the growth has slightly slowed down at 22%. But then again, the company has been speaking about, that business being in a lot more mature phase. And the driver for the food business will be the operating profit, not as much, acceleration in the revenue. Here, that has played out. The operating profit in the food business has grown by 67%. Margins in food business have increased from 15% to about 20% on an operating basis. Quick commerce, now that is the revenue driver of the company, and year on year that has seen a massive jump of 113%. Quick commerce has shown revenues of close to around 1399 crores versus 644 crores. And at the same time, the EBIT out there, the losses have been contained. The same time last year, they made an operating loss of 56 crores. And this time around, it is a loss of 30 crores. So the revenues have doubled, losses have nearly halved. That's a positive. And finally, going out, a business that they acquired and see a lot of potential in, there the revenues have come in at 259 crores versus 73 crores. And this time around, they have been investing in that business, as a result of which it's made a loss of almost 15 crores on an operating basis. The only thing they have to watch out for is Hyperpure now. Hyperpure, which is the B2B business, has shown a revenue of just about 13% in terms of growth at 1671 crores. The street would have liked that to grow a lot faster. So if you look at the overall numbers of Zomato, not particularly bad. Year on year, there's a 64% revenue growth, and as a result of which, the EBIT has grown a lot higher. The net profit has been impacted by higher investments in, quick commerce and the acquisition of the going out business. Quick commerce growing in triple digits, and the food delivery EBIT margin increasing by 500 basis points. I think the street should be content with these numbers.
But Mangalam,
yes, please.
yeah. So, no, completely take your point on the net profit declining because of depreciation. They've been investing in their other businesses, so therefore That point is well taken. I just want to draw viewers' attentions back to the quick commerce loss, because the thing is, in September we saw a profit and the street was super excited and happy. Now, again, I'm just comparing September to December for the sake of comparison. From a 48 crore rupee profit, they've gone into a 30 crore loss. You're saying maybe we should not look at it that way. There could be seasonality, etc. I mean, year on year, like you're saying, the losses have come down. But September was a profit, December is a loss. How should we read this?
So what you basically do is look at the acceleration in their store addition as well. So maybe the number of stores that they added in September were not as much as they added in December. The quantum of store addition, etc., will be known only once, the company gives out its information docket to the analyst. My sense is that up until September, the company was adding stores, a lot of stores matured as well. They would have increased the pace of store addition in the December quarter in line with, getting ahead of the festive season, etc. as well. So maybe that could have been a reason why, the revenues of the company have doubled while the operating losses have narrowed. So instead of looking at it quarter on quarter like that, just look at how the revenue has grown versus whether there has been an increase in losses or there has been a decrease. So long as there is a decrease in the loss and the revenue is growing, that means it's in an investment mode. And these numbers are, pretty chunky when it comes to different quarters, depending on the number of stores that you would have added in that particular quarter itself.
I have that number for you because their letter to the shareholders is out. And I think it's exactly what you're saying. The Blinkit store count has crossed the 1,000 store mark 1 quarter ahead of plan.
Yep.
And now they're aiming to get to 2,000 stores by December 25. I mean, look at that. They're going to double their store count by the end of the current calendar year. So I guess you got it spot on. Maybe because they've been rolling out stores so aggressively, that's why what was a profit has swung into a loss. But I mean, if it's investment in the business, maybe it's a good thing.
And the other thing is that they had targeted 1,000 stores in Blinkit by fourth quarter and 2,000 by fourth quarter of next year. They've brought that forward by 1 quarter as well. So now it'll be 2,000 stores by third quarter FY26 as against fourth quarter FY26. So that is a long-term positive as well. So they are accelerating their store expansion. That in the near term may be impacting their EBITDA, but the fact that they're doing it ahead of what the street is anticipating means that, there could be, if not, some upgrades to the estimates. There could be some, bringing forward of their growth, estimates as well by the analysts, largely because the company is rolling out stores faster than what it had guided for, and the guidance was something that the analysts were working with. I'm not sure if, there is any commentary on the competitive space and the margin profile of the Blinkit business, because that is something that the street will be eyeing as well going forward, given the competitive intensity in quick commerce. So if there is any commentary around that, the street may react to that as well. But basis the numbers that have come by and the commentary so far that we're aware of, it's nothing really to worry. Maybe one can argue about, the valuation of the stock or the future of quick commerce itself, but these numbers seem to be pretty much on track with what the company has been promising and what the analysts have been expecting as well.
No, absolutely. On quick commerce, they go on to say that the adjusted EBITDA is lower by 14%, driven by investments in expedited new store openings and new customer acquisition in quick commerce. So they're investing heavily into quick commerce. That could explain it. Having said that, on the food delivery side of the business, they are acknowledging the slowdown because they're going on to say that the muted 2% Q-on-Q GOV growth in food delivery is driven by the broad-based demand slowdown. So it's a mixed picture. It's on Zomato. Let's quickly get in. Thanks, Mangalam, for that. Let's quickly get in a view from Rajesh Kothari as well of Alpha Accurate Advisors, not just on Zomato, but the overall market. But Rajesh, since this is a hot subject at hand right now, food delivery, quick commerce, internet-based platform companies, what's your sense on this space?
Yeah, I think it is interesting space, and we all are monitoring. I think there are a lot of data points which one needs to analyze before to, the conclusion either way. So we are holding one of the big platform company, of course, not in the food business, but in the insurance technology side. And, we are waiting for those numbers. But I think it's the trend for next 2-3 years are going to be in the favor of the oligopolies who are into this platform business. But yes, there are a lot of numbers to analyze to check the profitability of the few of them.
Rajesh, I remember a year back when we were chatting, you were an investor in KPIT Tech. And at that time, the company was growing very, very smartly, beating their own guidance, every single quarter. But things have slowed down. Automotive in Europe has come under pressure. Tech spends have been declining, and companies are hurting. So in that context, what are you doing with ER&D companies focused on automotive, say KPIT in particular?
So basically, as I keep saying that we need to monitor the business cycles very, very closely. And for the ERW kind of companies for this space, the auto industry global spend is something very critical. So we have exited the name which you have talked about, a few quarters back. Currently, we are not holding, but we are again watching the space, and at right time we'll reevaluate it whether one should enter the stock again or not.
Okay, all right. Hi, Rajesh. Good afternoon. Good to see you in. Rajesh, I want to ask you about this travel and tourism theme. I recall, you all had some, you were playing some of those hotel-related stocks, I think. So the luggage players, well, you all played, which had worked very, very well for you all. Today we have Indian hotels that actually reported a good set of numbers, and the stock is slipped from the top. So it makes me wonder how much of the good news on this travel and tourism theme is already in the price, at least, in the next 12, 18 months or so. Your view?
So, well, first of all, we have a zero exposure to the hotel industry. We do not invest in hotel business. They are very, very deep cyclical business. But we always look at the proxy business. Like you said, the luggage business is one, which is like proxy business. So these are the businesses on which we are more positive on in the longer term. But I think the short term for a few quarters are, in my view, still going to be a little bit more pain because the inventory corrections are still happening. The competition has increased. And because, if your top three players, the competition becomes more intense, and that's where the price war starts. And I think the industry is still grappling with those issues from last 2 quarters. And I think I don't see any significant change in that, at least for next 1 or 2 quarters. But yes, that's more structural trend. We are seeing luggage over hotel because, that is less cyclical, more B2C, more FMCG. And therefore, that can be much more. Like we already made one of the large, multi-bagger was there in our portfolio. So I think that's an interesting space, and that's a much better bet than hotel industry, if you ask me personally.
Luggage over hotel. Stay on, Rajesh. We'll just talk about Kotak Mahindra Bank. That's clearly the stock of the day. Abhishek is here to give us the earnings fine print. What brokerages is saying?
Rima, it's been better than expectation from the analyst front that Kotak Mahindra Bank has reported in Q3 FY25. Now, what's worked is that their net interest margin actually improved versus an expectation of a decline anywhere between 5 to 7 basis points. It's actually improved by 2 basis points. Slippages declined sequentially. Analysts were expecting slippages to be higher on a sequential basis. As a resultant, gross NPA ratio is at 1.5% versus Motilal Oswal estimate of 1.56%. Deposit growth came in at 15.9% YOY, while Motilal Oswal anticipated it to be around 15%, and loan growth also better than analyst expectation, coming in at 15.1% YOY versus 14% growth that Motilal Oswal had anticipated. A strong core operating profit growth up about 11.5% YOY and about 4% sequentially. What has not worked in the result is that subsidiary PAT has declined both YOY and quarter-on-quarter for Kotak Mahindra Prime and Kotak Mahindra Investment as well. With reference to their P&L, both the NI and PAT is ahead of our poll. Now, brokerages remain upbeat, and they some of them have upgraded the stock. Citi has a buy recommendation with a target price of 2,070. They also have a 90 days positive catalyst watch on Kotak Mahindra Bank. ICICI Securities have upgraded the stock to buy from hold, raised the target price to 2,050 from 1,850 that they had earlier. And Anand Rathi as well, they have upgraded it to buy from hold. The target price now stands at 2,010 from 1,950 that they had earlier. Back to you.
Okay, all right. Abhishek, thank you very much for that. Rajesh Kothari is still with us, so we're going to come back to him in just a bit. By the way, look at Zomato. Zomato is down 4.5% at the day's lowest level. Right before the numbers came, stock was at about 254. From 254 to 237, it's essentially been a pretty negative reaction to the numbers at this point in time. We'll take a break here. We're going to come back on the other side. More market conversation. As I said, Rajesh is with us. Stay tuned.
Welcome back. Well, Zomato clearly is the stock of the afternoon. You'll have to keep an eye out on this one. The street doesn't like those numbers too much, even though on Blinkit, that store edition is actually been preponed. But otherwise, the street is very, very nervous on this set of numbers. And from the highs, in fact, the stock has now lost close to 20% of its market capitalization. Just one technical factor at play. The Nifty rejig will be announced in the next 1 month or so. And at least as of the last, notes that we had got, that Zomato could be a potential entry into the Nifty. So that could be a technical factor at play. For the time being, the street is taking note of the numbers and the stock at the low point of the day. Rajesh Kothari is still with us. Rajesh, what are you making of the financial and the banking space? At Kotak Mahindra Bank, that after a lull came out with a good set of numbers and the street likes it. While RBL Bank, the numbers are very, very disappointing. Stock was down 5% earlier today. Now it's up 2%, 7% of the day's low. Your view on the banking and financial space?
Well, I think the banking and finance space, the one most important thing, the two things rather, is one is of course the credit cost, which is by and large is reasonably fine in most of the large bank sector except the microfinance. So microfinance is one which we have been avoiding from last 5 years, and that remains so. On the private sector banks, I think everybody is focusing on two parameters. One is credit cost, and second the growth. And that's why one of the large names which talked about, they reported the healthy growth after a very long time, I would say. And that's why, there is a positive reaction on it. So I think, the growth is likely to come back in few private sector banks. It may come probably with 1 or 2 quarters lag. But FY26 is going to be reasonably good years for both NII growth, as well as, what I would say, PPOP growth, as well as by and large, the cost is going to be under control on the credit side. So all three put together, banking and finance should do reasonably well. The valuations are in your favor, and therefore, I think even from the stocks perspective, they should do reasonably well.
Okay. All right, Rajesh. Thanks very much for that. We've just got about 2 minutes to go before the day closes out. Before we head to the close, I really want to acknowledge some commentary that you cannot ignore on Zomato, because I was going through this letter to the shareholders. This is the first time I think that I remember, Mangalam would perhaps know more, but the company has look at the just vertical slide on the Zomato stock. And why is that happening? They have in black and white acknowledged that there is competitive intensity, and it has put, and I'm quoting from the release, by the way, heightened competition has led to a pause in margin expansion in the business, which is expected and should be temporary. This is Zomato saying, yes, the margin expansion in quick commerce has paused. It's as clear as that. So there's very, very quick profit taking underway on the stock right now. At some point, probably buyers will come in, medium-term buyers, but as of now, it's just a quick dash to the exit because this is just very clear, statements coming in, as clear as it gets, as direct as it gets.
Absolutely, and I think the price action tells you the story, isn't it? So even though the margin expectation was that there will be a pause in terms of that story of margin expansion and profitability, etc., and that expectation was there, mind you. But even despite that. And the stock, by the way, going into these results off the highs, the high was close to 300. It had already fallen to about 250. From those levels, it's lost another nearly 20 rupees or so after the results which have come through. So I think that's very, very telling. And it'll be interesting how it's a very widely covered stock from a sell-side institutional perspective. And it'll be interesting to see what the brokers the analysts really have to say after these numbers. So 230 at close, 7% lower. That perhaps is one of the stocks of the day on the other side, and all happening in basically 30 minutes or so. Now the Nifty is ended higher with about a 1% odd pop. Actually, not a 1% pop, a 100-point pop. That's about 0.6%. The Nifty Bank ending at decent levels, 1.6%, largely thanks to, of course, what happened in Kotak Bank. Interestingly, both Nifty and the Nifty Bank ending just about 1%, around 1% away from their daily moving averages, the 20 moving average. So that is interesting. And of course, the real big movers today, there was Kotak and Wipro on the upside and Zomato on the downside. Just in terms of sheer volumes traded, etc. The three of them really are the ones which made all the headlines. Zomato, by the way, did go up. Right at the top is the number one volume-led loser on the NSE today. And most of that action, of course, after the results really came through. Kotak, and of course, one more name I want to mention is Kalyan, because, for the simple reason that it went up, not at the day's high, but it did end at about 530, almost 6% higher. High was about 550 today on Kalyan, so ended about 20 rupees off the high even with the gains it closed with. Credit Access, 9% gain. There was, of course, Wipro was steady all through, about 6.5%. And many others, I mean, Tejas Net, Global Spirits, Greaves Cotton, and others as well, Triveni Turbine, and so on and so forth. So decent day. Market breadth was positive, about 1,800 stocks higher and about 1,000 stocks which are lower on the NSE. Well, I think we're going to wrap up on this edition, a closing bell here. Thank you very much for staying with us. But don't go anywhere. Rima and I'll take you through markets forward after a quick commercial break. Stay tuned.